we're continuing our coverage here from the World Economic Forum's annual meeting in Davos. And joining us now is the Global Chairman and CEO designate for EY, Carmine Di Sibio. Thanks very much for joining us here on CNBC TV 18, and congratulations. You take over in July, I believe.
That's correct. Thank you. Thank you for everything. And I'm very excited about the role. I've been to Davos many times, but it's my first time, obviously, as a Chairman and CEO elect of EY. And I'm excited for the whole event.
So, EY is all about asking better questions here at Davos. That's your hashtag. But let me ask you about the outlook for 2019. All indicators seem to suggest that it is going to be bleaker than 2018, and there are many triggers pointing towards uncertainty. What would you be most concerned about?
Yeah, we do believe there are certainly some negative headwinds in terms of the global economy. Many of the economies maybe will slightly not grow as much as they did in 18, but we don't believe 18 was bleak. We thought it was pretty good, and we think the same thing about 19. It'll be maybe a little bit slower. There are a lot of geopolitical events that are slowing some of the economy, but when you really look at GDP growth and a lot of the emerging economies, including India. India, it's over 7% GDP growth. I mean, the largest growth in terms of GDP. That's fabulous. And there's, technology, digital change, transformation. That's going to drive a lot of the global economy. And that's a counterbalance versus some of the geopolitical events that are happening.
Just let's stick with the geopolitical events. Yeah. And one of the sort of downside forecasts to global growth is this prolonged U.S. government shutdown. And if this were to continue, how it would impact the U.S. economy and global growth in general. And of course, Brexit, whether Plan B is going to put into motion or eventually work or not. What would be the significant global risks that you would watch out for?
Yeah, so these are all global events. I mean, in terms of the U.S. shutdown, I don't think it's had much of an impact so far. Surely, if it lasts for 6 months, a year, it will have some impact, but not great. The U.S. economy is still doing very well. U.S. corporates are doing very well. So, there's still a good amount of optimism in terms of what's going on. In terms of Brexit, I do think the whole European situation and what's going to happen and Plan B and what is Plan B. But I truly believe that we're going to come to a resolution that's going to be fine for Brexit. I do not believe we're going to have a hard Brexit. I think at some point, cooler minds are going to, pay off and people are going to do the right thing. The European economies are doing okay. They're doing fine. We're very bullish on the Indian economy. We're bullish on the U.S. economy. We do think China and the trade war with China and in the U.S., that is a factor. But there is progress being made there. I do think that China's 6.5% GDP is going to be a bit strained. I do think that there are signs within China that show some slowing down. So now whether that's the tariffs that are doing that or whether truly it's just within the Chinese economy itself, that's a question. I don't know the answer to that, but there are opportunities. And so overall, we would say the overall economy for 19 should be good, maybe not quite as good as 18.
2018 was a great year as far as the IPO market was concerned. It was a big year for M&A as well. Do you see that continuing in 2019? And you talked about this digital disruption and transformation. Will that be the real trigger for both M&A as well as, for what we see happening as far as the markets are concerned?
Absolutely. Digital transformation, we certainly think M&A is going to continue. Even early this year, there's already been many deals announced. Last year, a booming M&A time. We see it really in sectors like life sciences, health and life sciences, potentially some industrials as well. Those are areas that for sure there will be more transactions. Private equity investments continue in a big way. 18 was a boom year in terms of investments, in particular investments in emerging markets, in particular in India. Robust investments, robust M&A, that will continue.
Yes, you're absolutely right. It was a great year for private equity in India. But what are you most confident and bullish about when it comes to emerging markets, specifically markets like India, where EY has a very large presence?
The thing I'm most bullish about is talent. I think we have tremendous amount of talent in the emerging markets. And this is true for EY, and this is true really for everywhere. If you think of the talent, for example, that India has brought to the world, not just to India, many of our clients, and I was thinking about this morning, a lot of our clients in the U.S., in South Africa, in the UK, in a lot of the Anglo countries, have Indians that are leading those firms. There's certainly a lot of CFO that are Indians. I think the education system in India around technology, around finance is spectacular, and we are taking advantage of it. We have huge operations in India. We're one of the largest firms in India, and we have shared service center in India that really services our entire organization globally. So to me, the biggest thing that could come out of the emerging markets, in particular India, is talent.
Since you're talking about talent, let me talk about taxes now. And we've just had the Oxfam report
I like to talk about talent more than taxes.
I would imagine, but let me ask you about taxes nevertheless. Oxfam has put out its annual wealth report, and of course, no surprises there. The rich are getting richer, and the demand of a 1% wealth tax, that governments should adopt fairer taxes so that we can provide for healthcare and education and sectors that require additional funding. Do you believe that we're likely to see some forward movement on that? As I said, it's not a new idea.
Yeah, I'm not so sure we're going to see a lot of forward movement there. I do think we need to do something in terms of income inequality. I'm not sure that tax is the way to go. This is a debate that's been had all over the world, in the U.S. in particular. The more you raise taxes on the most wealthy, the more charitable giving goes down, the more help goes down. So it's not an easy answer. I do think that companies have to be much more involved in terms of income inequality and making sure that they're providing jobs. I think a lot of this is around jobs and really creating opportunities for people. And I'd rather we move that way as opposed to, some kind of tax that isn't going to really help long term. Whatever's done has to be sustainable. And to me, it's all around jobs and creating jobs.
Inclusiveness, and that's something that you're looking at as well and have been looking at EY. In terms of bringing more women into the workforce, in terms of the gender gap, what are the specific changes that you've brought about, and what more can we expect now as you take over as chairman?
No, thank you for that question. I chair our Global Diversity and Inclusiveness Council. I'm very, very passionate about making sure that we have a diverse set of leaders at EY. And when we talk about diverse, we're not just talking about gender. We're talking about sexual preference. We're talking about geographical diversity. Our global board has people from all over the world that sit on it. So I'm going to continue to make sure that our leadership group continues to be diverse in all those different ways, not just gender. But gender's important. So you'll see more and more women in leadership roles. We have our America's leader and our U.S. leader is a woman today. You'll see more leaders across Europe and across Asia as well.
Well, we wish you the very best of luck, and thanks very much for joining us here in Davos.
Thank you so much.
And look forward to seeing you in India.
Absolutely. I will be there.